everybody? I'm back. Good morning. Good morning. Welcome to the morning show. I'm Spencer Israel, joined as always, of course, by Steve Strazza and JC Parets. Did you miss me while I was gone? I hope yesterday didn't go too far off the rails, but relax. The fun police is back in town. All right. Today's show, here's what we got. We got Jeff Weiss. This guy has been a technician for like 4 or 5 decades. He used to run the technical desk at UBS and Lehman. He'll be on this show to tell some really fun stories. We have Kimmy Sokoloff. We have Patrick Donawilla. We have you. We have me. We have, what's up, chat? What's up, Jason? What's up, Ken? I see you guys. Good morning. Good morning. We got some earnings. We got some guidance. We got some news, some movers, and charts. You know we have charts. Obviously, we have all the charts. So if you're watching on YouTube, hit that thumbs up. Let's roll that intro.
All right, Mr. Strazza, Spencer Israel, back from Minnesota. Minnesota, huh?
That's right. That's right.
Did you have a Juicy Lucy, and how was it?
I did. I tweeted a picture of it. It was fantastic. I had to wait like an hour. I had to wait outside. That's how long the line was.
And it was humid in Minnesota, huh?
It was humid. Yeah, it was like it was like high 80s on Friday. But it was great. I went to the Mall of America, man. If you haven't been, I don't know if you need to go. It's just a really big mall.
Were you the only person at the mall? Were there other people?
Oh no, man, it was packed. It was packed.
Did you go to GameStop? Did you go to GameStop when you were there?
I didn't see a GameStop.
You go to the Radio Shack?
Did you go to Circuit City?
No. I went to I don't know, all the stores. Lulu, LL Bean, Macy's.
So you finally got to Lulu.
Yeah, right. Yeah.
Let me tell you, Spencer looks good in yoga pants.
I bet he does. I want to see it.
Let me tell you, he looks solid. He looks solid. I want to talk about time horizons. I feel like this gets lost. You know, people are like, "Oh, JC, should I buy Apple?" And it's like, like for the next year, like the next 5 minutes. Like, what's your time horizon?
The answer for that one is just yes.
Yeah, probably. Hit it, Spencer. All right, so what we like to do around here is that we like to incorporate multiple time frames, and that's the beauty of technical analysis, is that we can start with a bigger picture, get structural perspective on the overall trends, the major trends in stocks and interest rates and commodities and forex, and just understand, because trends are very powerful. There's a much higher probability that the asset prices are going to continue to move in the direction that they're going than for it to just completely reverse out of nowhere, right? We know that. We have the data. So when we're looking at bigger picture trends, we want to be careful with fighting those. You know what I always like to say, that there's nothing wrong specifically with fighting trends. It's just that if you are fighting trends, you better have a really good reason. And you better have very strict, well-defined risk management procedures in place. And if you have those two, then fight the damn trend. I mean, we're buying PayPal, right? Or at least I'm buying PayPal. Maybe this guy's just like, I'm not buying PayPal.
No, I am buying PayPal. I'm very
okay.
PayPal.
You're in. You know what I'm saying, though, Strazza? I mean, I know you know what I'm saying, but for people listening out there, we start with the bigger picture. We start with the underlying trend, and then we dive into shorter term time horizons for more tactical opportunities. So we look at weekly charts and monthly charts to get structural perspective of overall trends, and then we'll dive into the daily time frames for tactical opportunities. Right?
Yep.
How'd I do there, Strazza?
No, you did great. It's an important reminder and lesson. I would also just add to it, you also consider the environment, like the backdrop that you're operating in. So what do I mean by that? Catching a falling knife and buying a chart like PayPal last year, I wouldn't have done, right? But this year, with everything else we're seeing, and with most stocks trending well, I'm happy to catch that falling knife, actually. And like you said, I know exactly where I'm out. Maybe I lose $1 in the case that I'm wrong. Like, that's fine. So I think environment also plays into those decisions too.
Yeah, no, that's a good point. And that's part of trend identification, right? It's not like, oh, what direction is the S&P 500 moving in? It's like, what direction are most stocks moving in? The S&P 500 doesn't tell the whole story. I'll give you a fun fact. You want a fun fact here, Strazza? I know you already know, but I will give it to the rest of the folks. So the S&P 500 yesterday was down 45 basis points. The NASDAQ was down 134 basis points. In other words, NASDAQ 100 down 1.34%, S&P 500 down 0.45% yesterday. Meanwhile, on an equally weighted basis, every single sector was up yesterday. Every single one, except for healthcare. Yeah. Healthcare was down 20 bips. Everything else was up. Some of them were up 2-3%. So it's not just the S&P 500. It's the overall trend of equities. And Strazza made a good point in terms of PayPal. Last year was just in free fall. This year has been consolidating, has been basing. Its brothers and sisters and cousins are breaking out, right? So I think that's important. And I want to bring up another topic here, which is cryptocurrencies. Throw up the 4-hour chart.
RSP was up, to JC's point, Sam. Yes, RSP was positive by, I think, like 0.5%. And even more, like a broader measure of large caps, EQAL, which is the equal weight Russell 1000, was up almost 1% yesterday. So it was a good day for stocks yesterday. You just didn't see it at the index level because the best and biggest stocks got hit really hard.
RSP, the equally weighted S&P 500 was actually up 60 bips yesterday, Mr. Strazza. 60 bips.
What did I say? Yeah, okay. I said half.
Yeah. I mean, no, that's substantial. I mean, that's not nothing, right? You know what I'm saying? 60 basis points. In an environment where the Qs are up are down 135 basis points. Right. So just something to keep in mind. Okay. So when we talk about the stock market trades 32.5 hours a week. When you adjust throughout the year for all the holidays, you're looking at an average of 31.5 hours a week. 31.5 hours. Cryptocurrencies trade 168 hours a week, which is over 5 times the amount of trading hours. So, like we were talking about how we look at weekly charts and monthly charts to get structural perspective on equities, and then daily time frames for more tactical opportunities. I have argued for a long time now that when you're looking at cryptocurrencies, perhaps those daily time frames are the equivalent of the weekly charts for stock market. And then the 4-hour candlesticks are more equivalent to the daily time horizons for cryptocurrencies. How do you feel about that, sir?
Basically, the math that you're doing here, it's basic math. We do use calculators for it, but you're saying that stocks are open for about a quarter of the time every day that crypto is open for.
Can we just point out how Strazza is such an accountant? He's such an accountant that he has a calculator on his desk.
I hate this calculator.
We have calculators on our phones, by the way, Strazza. I don't know if you got wind of that.
This calculator is solar powered and it'll literally turn off as I'm using it. If I'm not shining out the window.
You have such fancy technology that definitely didn't exist 20 years ago.
No, I just bought the wrong thing. Anyway. All right. So what are you seeing when you talk to me about these fractals here in Bitcoin? What is this? Looks like a base to me.
Well, listen, I don't have all the answers, contrary to popular belief. But technical analysis definitely goes a long way in helping us ask the right questions. So if you look at the daily time frame, punch up the daily time frame there, Fonz, on the Bitcoin. There you go. So you got this is the weekly chart. But nevertheless, just running up into these former resistance levels. Now go back to the 4-hour. This is zoomed in, so you could see those April highs, right? We're running into those levels. That's, pretty normal, classic, resistance. The market recognizing, acknowledging that former resistance. This is literally, you're watching demand attempting to absorb that overhead supply. That's literally what we're watching here near this 31,000 level. And I want to be irresponsibly long Bitcoin if we're able to finally exceed those levels. And we may or may not today or this week or ever. Who knows? But if we are above 31, I want to have some very aggressive positions. But I want to throw this question out there. If you guys want to chime into the chat, let me ask you this, Strazza. We talk about the correlation between Bitcoin and the NASDAQ, let's just say, and they've been moving together. And our bet is that correlation is gonna return and we'll stay positive like it has in the past. Okay, fine. But if we're doing the fractals and we're looking at daily time frames for the NASDAQ and daily time frames for Bitcoin, and they're moving together, and then we're talking about how on a daily time frame Bitcoin is more like the weekly charts, and then the 4-hour time frame is more like the daily charts for stocks. But if they're moving together on a daily time frame, like they're not different. They just trade more hours. But when we're looking at the global circumstances and what's happening globally, it's moving with stocks on a daily time frame. So how do you think about that? See what I'm saying? Am I thinking too much?
Yeah, I think you are.
Okay. All right. I'm just saying this is what I'm thinking about. State of the markets, right? State of the markets. This is what's on my mind. I'm thinking about time horizons, right?
I, the nice thing about crypto, the really nice thing about the hours and the way that crypto trades is it's just such great information about risk appetite over the weekend that we never had before.
Yeah.
So I use it on the weekends to read where we're likely headed on Mondays. And I know people will be like, oh, you're going to look at Bitcoin and tell you what the stock market's going to do? Yes, 100%.
Yeah.
And it's worked for a long time now.
Yeah. No, that's probably right. You know what else I like about cryptocurrencies? I like the words. You know, like in the old days, like Edwards and McGee in the 1940s would call them uptrends, right? Or rallies.
Yeah.
And you know, the kids these days call it mooning, right? I like mooning better than uptrend, you know. So like the words are cooler. It's the same thing, you know, liquidity pools. God, like a market maker, right? Right. We've had that for a long time. They just call it different things.
They have their own language,
Yeah.
JC. Your tweet was funny the other day when I think you said the kids call it tradfi.
TradFi.
Should we read that? I think that would be an interesting thing to kind of go over, just all these developments.
Yeah, go ahead.
It's been a really busy week. Or I'm sorry, a very busy month for crypto. So I'll start off and then you can read. I think that was Melton's tweet, right?
Why don't we just share it? We have the technology. It's right there on slide 1. Throw it up for the kids.
I got another one when we're done here.
All right, hit it.
This is huge. This is huge. So what's going on here? The good old boys are moving in on the space, is what you're saying. What you're seeing here.
Yeah.
It took their time. They were very strategic about it. You know, methodical maybe. I think they've had some great help with U.S. regulators, and it's their time now. Coinbase is weakened. Binance is weakened. There are really no good options in terms of exchanges and brokers anymore. And you're looking at the new ones. I think this space will look radically different 2-3 years from now. We might all have our crypto held at our primary broker.
I like how how Melton put it. She said that while the institutions are coming has been more of a trickle than a wave. We're seeing the bridges being built in real time.
I think the wave is coming now, though.
I mean, maybe, possibly. But I thought, the bridges and highways, the methods for institutional adoption are literally being built before our very eyes. The institutions may never come, right? They may never come, but I think they will, and this is the way they're going to do it, right?
They are, and we've seen the writing on the wall. That's what she means by building bridges, and that's what I mean by it's been methodical, right? Like there was news last summer, maybe Q3 of last year, about Coinbase and BlackRock teaming up, sharing pricing data and information. It was like, what is this? Why? What the hell? BlackRock needed to do that. That's like their edge. They provide pricing and very transparent information on all their funds. They're not going to launch a Bitcoin fund unless they have that. They teamed with Coinbase. That's what that was. So they were planning this entry now last year when FTX was blowing up the whole space.
Yeah.
That's when this was being planned.
Yeah, when we were like, why are they moving all these things out of the United States? This is bad for America, all this stuff. As it turns out, it wasn't that at all. They were just kicking out the new players and giving all the power to the old players, the ones that,
kicking out the new and making room for the old.
Yeah. Which I'm okay with. I really don't give a damn.
I think anybody who...
I know you take it very personally. You don't like it.
I don't. No, I don't. Listen, anybody who's invested in the price of these things rising, this is bullish. This is exactly what you want. You want the institution.
So you're saying you don't care that the new players are being pushed out of the way and bringing back the oldies?
Listen, I thought Coinbase was going to run this space, but when the facts change, my opinion changes, right? And that's what's happened this year so far.
And you're kind of like an old man. Strazza's like a young, good-looking guy, but like in his head, he's like a 70-year-old man in a lot of ways. You are.
Maybe.
Especially when it comes to like, markets and like some of your quirks. Like you have a little bit of old man in you. It's not a bad thing. It's actually a good thing.
I like to keep it simple. Like maybe I'm a little bit traditional, but I don't think it's never a bad thing to bring in the most trusted financial institutions to run a space.
Can you throw the bubble chart? Throw the bubble chart.
Yeah, throw the bubble chart.
You know what we need? We need a bubble chart bumper.
It's going to bring in new...
The world needs more bubble charts. I've said it before, and I'm going to say it again. I know you guys think I'm crazy. I'm telling you, the world needs more bubble charts. I don't understand. Why am I the only one screaming from the hilltops that the world needs more bubbles?
You done ranting about bubbles? I'm going to finish my point.
Go.
I think the fact that now we have Fidelity, BlackRock, JP Morgan in the space, that is going to really, really set the stage for some real institutional money to flow in, right? People have never been comfortable banking their crypto with Coinbase or these other players. Now they can bank it and have custody through the most trusted players in the space. That's not a bad thing for anybody who's bullish crypto. This is a good thing. Maybe it's unfortunate, but I think, 5-10 years ago, a lot of people could have said, this is probably the way it's going to shake out. It always shakes out this way. So I don't think it's bad. And let's just, Ash Crypto tweeted this out. This is June in review for crypto. June 5th, SEC sues Binance. June 6th, SEC sues Coinbase. June 14th, Bitcoin falls below 25,000. We call that a shakeout. June 15th, BlackRock files for a spot Bitcoin ETF. June 19th, Fidelity planning to file a spot Bitcoin ETF. That news is now out. June 20th, crypto exchange backed by Citadel, Fidelity, and Schwab launches, which you showed. I think it's that Galaxy from Meltem's image. June 21st, Fed Chair Jerome Powell says crypto has staying power as an asset class. Interesting. June 23rd, SEC approves first leveraged Bitcoin futures ETF. June 23rd, Bitcoin hits 31,000.
Throw the now let's go to price and in what actually pays us, right? All of that is great. It's setting the backdrop. I don't think any of those things are bearish. Joe Gallagher throwing out there's nothing wrong with a 70-year-old man. Not at all. In fact, that's one of Strazza's better qualities is the old man inside of him, I would argue.
I hate country music though. I'm big classic rock.
You live in Key West, bro. Don't they play a lot of country?
No. Singer-songwriter.
I think they do. I think they do.
A little more.
So let's talk about what's going on here on the y-axis, up and down. You're looking at percentage off new 52-week lows. And then on the x-axis, left to right, you're looking at the 1 month change. Look at Mara, Hut mining, Bitcoin moving in there. Interesting, right? But then on the lower left, you got Cosmos, Polygon, Solana, Doge, Avalanche. Those things suck.
I asked you yesterday, just give me an answer. What is the best way to play this thing right now for this quarter? Q3.
Play what thing?
This thing that we're looking at. This new bull run in crypto. You get to pick one horse for the next 3 months.
And it's the one that I think that can go the highest.
Listen, it's how you want to play it, and then you can tell me why. It
depends on how far you want to go out on the risk curve, right? Like if you want to buy Mara or Riot or Hut, you're going to get the best bang for your buck, probably, especially if you're in the options market. Or you're going to take greater risk. If you want to be in Bitcoin specifically, you have very well defined risk because you really only want to be long at this point. Putting on a new position long above 31, so it's cleaner. So I think there's something here for everyone. I think clearly, unless we get some massive rotation at some point soon, these Solanas, Polygons, I'm just not seeing anything there yet. They could set up, but just not seeing it there yet.
JC, back in 2021, what if I told you that the juice, if you want to trade crypto, the juice is in the stock market? Wouldn't you have told me I'm crazy? You would have said, no, the juice is in the alts. Look at Mara and Hut up almost.
I got my ass handed to me last Thursday. I was out with the crypto people, and I was talking about my Bitcoin position. Do I own enough? Should I be adding? Blah blah blah. Just chit chatting over a nice. I've been drinking these Aperol spritzers lately.
God, you're so trendy. They're so.
Is that trendy? Is that a thing?
Oh, you're such a trend follower.
Oh my God, look at me. I'm so cool. I actually like it because it's refreshing and it doesn't get me drunk. Like if I'm drinking whiskey at 4 o'clock in the afternoon in the sun, like I'm going to be dead, So like a nice Aperol spritz, I'm not trying to get loaded. So anyway, I like the Aperol. I didn't realize that it was cool. So I guess that makes me, I'm in the know, Straz. I'm in the know. I drink Aperol spritz. Can we throw in the NASDAQ? NASDAQ 100 is off to the best start ever.
Wait, before we get away from...
Hold on. I also just want... JC didn't answer my question again.
Okay, you're right.
Which question?
You won't pick a horse.
I told you Mara. That's the one with the best bang for your buck. You're going to get the most risk, but the question is, what's going to make the most money? If Bitcoin goes up, probably Mara, right?
All right.
Before we get off of crypto, did you know that the first levered Bitcoin ETF starts trading today.
Yes.
I'm gonna,
I didn't know it was started trading today.
I'm
Yep.
gonna make fun of this thing so much on Twitter.
B
Hold on. How levered? It's only 2 to 1. It's amateur shit. Is it
it's
only 2
two,
to 1?
yeah, two, oh, it's only a 2x. Excuse me.
Who did it?
BIT.
Hill? Who did it?
Wait till the decas. Wait till we
no.
get the decas.
Who did it?
It's
The
B
10x.
BITX is your ticker. Who's the firm? Oh man, who is the firm? Volatility Shares.
Yeah.
Okay.
Could say that again.
Volatility Shares.
This thing's probably going to be liquid right off the bat, though. You know, a lot of people are going to be taking advantage of this.
Liquid off the bat and delisted by the end of the year.
Wow, delisted by the end of the year.
No, it won't be. It won't be.
No, it won't.
It
Definitely won't be.
Plenty popular. Yeah.
Okay. Can we get back to this situation here, because I was promised a recession, maybe even a crisis. Instead, I got the best start to the Nasdaq in history. Any thoughts?
You know, we were saying on one of the shows yesterday, I think Sean and I, if these stocks or all stocks literally just went sideways for the next 2 quarters, it would be an incredible year. We go sideways for the rest of the year. And the performance so far, I mean, yeah. So we need to keep that in mind. You know, and JC, with something like the dollar stuck in a range, rates stuck in a range, those were our 2 big intermarket, tailwinds or headwinds that became tailwinds last year, kicked off the bull run. If they just stall for a while, maybe equities stall. It's just a nice digestive phase for everything, and then we get back on track next year. Why not? Maybe commodities are the place to be in the back half of the year. I just think it's time to get creative. Like, stocks have done a lot of work so far this year, and to ask for more going into year end, I think we are getting a little greedy at some point here.
I want to get into what's moving, but I have I don't want to say a confession, but I do want to say something that I've never said publicly before.
Can I? Yeah, go.
I'm going to throw in here slide 1, because it's exactly what Strazza was just talking about. And I want to get into what's moving, so get ready, Spencer. But take a look at slide 1 there. This is the S&P 500 relative to the CRB Commodities Index. I'm not big into these downtrend lines. I acknowledge them. For me, I'm more of a horizontal kind of resistance guy. And you do have a key Fibonacci retracement there in addition to the downtrend line. So if you're going to get some kind of rotation into commodities in the back half of this year, this would be a perfectly logical area for some of that to take place. And it doesn't mean that the stock market needs to fall.
Nope.
It just means that commodities need to do some out. It would be very likely for commodities to do some outperforming. So why don't you throw in slides 9 and 10 there quickly? What I did? You know what I did at the close yesterday, Strazza?
When I look at that chart, JC, hold on. I think that chart needs to base more. And more basing from that chart means commodities pick it up versus stocks, really.
Yeah.
And you get some relative strength there.
Throw up slide 7. Guess what JC bought at the close yesterday?
Chevron?
That's right.
Why?
Look at the next chart. Chart. That's why.
Oh, dude. You know what? Listen, good for you. This is a high risk, high reward bet. I don't hate it at all.
High risk? It's 150. It's right there. I mean, the risk cannot be better defined.
Okay, it's a low probability trade. You're buying a laggard. You're buying weakness, not strength.
Remember what we did? Let me tell you, my friend. Remember what we did with Caterpillar?
I remember.
The chart looked similarly ugly. On a short-term time horizon.
Long Caterpillar.
But the bet with Caterpillar was that this was a bull market, and if in fact it was, we were going to see rotation into industrials, and Caterpillar was just a great vehicle to express that rotation into industrials. And what happened? So this is a similar sort of situation here. Perhaps some rotation into commodities. You're already seeing in some of these agricultural stuff. Volatility is super, super cheap.
It's the same
I went for it. I went for it.
PayPal. A lot of what we're doing right now.
It's not the same as PayPal.
No, it's similar to PayPal, where you're buying a weaker name and you're relying on the broader market as, evidence for why you want to be in that trade. I don't hate it. Listen, it is a really difficult environment to go out and try and short stocks in. Breakdowns are failing.
You like my trade? You think I'm a little crazy? Or both?
I have a tiny bit of energy exposure still, but I turned sour on energy a while ago now when I got rid of my Oxy. And listen, I need to see it. I'll be happy to get back in, but I think the risk of rollover for energy is just really big right here.
Oh,
Listen,
we'll know soon. We'll know soon, and I like it. Spencer, you want to hit what's moving? You want to hit some earnings before we bring in Jeff Weiss?
we should hit some stuff from the chat too. There's some questions in there we should take.
Spencer, you just. Well,
We have like 3 or 4 minutes to our guest, so let's do some what's moving. Lordstown Motors is going to be one of your trending stocks
Ooh.
of the day. Yeah, you know them. Don't act like you
What?
don't. Ticker RIDE. This was a
I do not know.
the good old days of 2020 and 2021. When everything was going up, this was a SPAC. This was a SPAC, darling.
This is a $46 million stock. Why are we talking about this?
No, JC,
Because
they're homies with Workhorse.
I know, but this is a penny stock. Why are we talking about this?
Remember Workhorse?
because they filed for bankruptcy. So if you've bag held this entire time, here's the conclusion to your story.
Oh, got it. So we're not necessarily buying them. We're just showing the death. Got it. Fair.
Yeah, we are showing the death of this. I used to drive past this plant. It's in Ohio, the Lordstown Motors plant in Ohio. It's right off I-80. I used to drive past it all the time, and it's just a symbol of yesteryear. It used to be owned by GM, and then they famously closed it, and Lordstown famously bought it, and it was a whole political thing. Anyway, this is a company that SPAC'd, never really got going as far as production is concerned. I think they made like 250, 300
from
cars.
400 to 4. Not bad.
Well, the 400 is actually a reverse split price,
Sure
so it actually was not. It was never that high. But
the equivalent.
yeah.
What?
Yeah.
The equivalent.
So listen, fun fact. Spencer told me a fun fact that the Workhorse and Lordstown Motors people share like IP or something like that, and apparently share some executives. Workhorse, just want to give a shout out to Workhorse before it goes bankrupt. It's the first stock that we outlined as a trade idea when we launched Under the Hood, which was our first bottoms up scan at All Star Charts 3 years ago. So.
Okay, I guess we're clapping for that. All right,
you can trade stocks that go to zero.
Yes, you can. All right, Lordstown Motors, that's one. Delta Airlines came out this morning and said, yes, the consumer is strong. Our customers are looking good. They reiterated their guidance. Actually, they sort of raised their guidance for 2023. They said their EPS for the full year is going to come in at the high end of the $5 to $6 range that they'd previously given, and then they reaffirmed their guidance for next year as well. So basically saying, I think he was on CNBC too. I think the CEO was on CNBC this morning, and just basically saying, hey, our customer is strong, and demand is strong for our flights.
Listen, has Delta gone down yet? Did that win streak break? What did it end at? Dude, wow.
15?
Yeah,
is it?
I think 15. Let me see here. 14 bars. Incredible. So looks like it is going to be making new highs today at the open. Highest level since mid 2022. So that's new 52-week highs. They look better than any of the other airlines.
I mean, airlines in general, transportation, the rotation that we've seen into industrials overall. Because remember, airlines are all in the industrial sector, and then you've got the you got the New York Stock Exchange Airlines Index hitting new 52-week highs, right? Because there's only 7 stocks going up, right, Strazza? So all these airlines must be getting into artificial intelligence. Is that what's going on?
I wouldn't be surprised if they do get into artificial intelligence, but it's just that whole industrial theme, right? Like another group I was looking at yesterday, it's not even just like direct consumer facing industries, but like building materials. Look at this Dow Jones Building Materials Index. There's just so many industrial subgroups that are working.
But that makes sense with all the home construction stocks doing so well. Shouldn't the building material stocks be doing well too?
It's the same exact theme. The charts look very similar. I think more of these building material companies should be included.
These are in the industrial sector, correct? They're not in the materials.
No, some are materials, some are industrials. It's weird.
Like a hybrid. Yeah.
It depends, really. Like you have like the Martin Marietta's, which I'm pretty sure is materials, and then you have other ones like Builder First Source, which I think are industrial. So it's really a mix. But look at the nice base here. Throw that chart up.
Should we bring in Jeff Weiss?
Oh, we should bring in today's featured guest, Jeff Weiss. He's the author of the book Relationship Investing. He's also been a technician for decades on the street, everywhere from UBS to Lehman and more. And I'm sure he has some good stories for us. Let's bring him on the show right now.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Jeff Weiss, welcome to the show, my friend.
Good to see you again, my friend, after our lunch up in Bethlehem. How are you?
I'm doing all right.
Spencer, thank you for everything you did in prep for this, sir.
Welcome.
Listen, Jeff, we around here, we like to talk about markets. We like to talk about technical analysis. Do you know anything about those things?
Let's see. Only since April of 74, when I learned how to sell on the way down to stop cuts from becoming hemorrhages or amputations and preserve what I have before trying to have more. The first lesson I ever learned in this business. Before we start, I know you're going to run the disclaimer there. I just have to mention what we're chatting about is for general informational purposes only, and under no circumstance to be considered as a recommendation of any kind to buy or sell any individual security or employ any individual investment strategy, and that you have to consult your own financial advisor, tax professional, accountant, or other trusted financial.
All right. The lawyers are happy.
Very widely. Thank you. How'd I do?
That was pretty boring. I fell asleep, I think. Jeff, why don't you tell me and the folks what the world was like when options trading got going?
Well, options trading got going, I believe, in 73 when I was at a Merrill office and some fella named Walter, who was smoking his cigarette like this, was telling me what in the money and out of the money was. They brought out 10 stocks.
I believe 50 years ago.
On this, IBM was one of them. And that was the beginning of it, because before then you would open up your Barron's and you'd see Ragnar, Ragnar, I believe. And they would advertise put and call options and how much it would cost and what length of time you had. So that was, I believe, in 73.
That was 50 years ago.
50 years ago.
50 years ago. That's crazy. So it was only a few stocks. And then when did liquidity really start getting into the options market? Was that late 70s or much further after that?
I don't know. In terms of the 10, it spread from there. And I don't know when liquidity actually got
because I wasn't born yet, Jeff. I wasn't.
Unfortunately, I was, but the trouble is, I forget because you're too young and I'm too old.
That's right. Nobody remembers. Why don't you? Can you put the current market environment in perspective? Right, you've been through a bunch of cycles. Like we're talking about your friend Walter with the cigarette 50 years ago, right? So you've seen a few cycles, to say the least. Bulls, bears, crashes, melt-ups, the whole thing. You've seen it all at this point.
Yeah, and my face and my x-rays show it.
Yeah, I bet. What does the current market environment look like compared to all of those? Like, give us some context.
Well, this isn't it. Thanks, JC. And again, thanks for having me on. This is very interesting because memories on Wall Street, I believe, there's a saying, are short. They've always been short in many respects, but this is particularly short because on October 13th of last year, according to my remedial math, the S&P, and I just want to get it right here, retraced approximately 50%, which to me is a key technical metric of 50%, 50.5 to be more exact, of its March 2020 intraday low to January 2022 intraday high. The iShares Russell 3000 ETF over that span went up and retraced 50.9%. So that was the first thing, because so far in October, that's the low. Secondly, what happened on October 13th, in addition, was rare. You might call it much like Batman and Robin, the dynamic duo, because the Dow, which was down almost 550 points on the 13th, when it made that 50% retracement bottom so far, rallied over 1,500 points, if memory serves me correctly, to record an 827-point daily closing basis gain, and we haven't seen those lows again. To me, bottoms are made when you don't give folks a second chance to get in, much like tops are made when you don't give folks a second chance to get out. You either take what the market gives you at the market, or you stand the real possibility of rotting them down. Now, near term, I guess you'll note the downside gap the day after the S&P got to an intraday high of 44.48. Again, if memory serves me correctly. So that downside gap has caused, I believe, one of the things causing some market confusion near term, which is why you've seen the market come in a bit. But October 13th, in my career, going back to 74, my first investment in Mattel was in 1969, 54 years ago. October 13th, I mean, to me, that's got to be one of the 10 most unbelievable days in my 5-decade career.
Wow, that's saying a lot. You've been around a couple of years, right? So let's get down to it. Are we buying it? Are we going to new all-time highs this year? Is that what's happening?
I'm also going to all-time highs. The first thing I'm watching on the upside, in a bull market, a lot of resistance areas will get bettered. Just like in a bear market, what does support mean? It's often a way station to lower prices. Right. So to me, what is the major trend? Because all of the trends are going to exist within that trend. I mean, I used to go to the trading desk after I do the morning meeting, and I'd say, wow, that's a nice base. How long is that? Guy goes, that goes back 2 days. I go, what do you mean 2 days? I go, it's huge. And I'd say 2 days. He goes, yeah, it's 38 and a half. It projects to 38.90. I said, no, that far? I mean, I come from a time where a base is 6 years, 8 years, 10 years, daily closing, daily bar, weekly closing, weekly bar, monthly closing, monthly bar, quarterly closing, quarterly bar, from as many angles as you could get it. It's like, it's kind of like I'm doing a photo shoot for the stock market. Matter of fact, every day, you see these are my numbers. I don't know how I'm playing. I've been doing these since 76. Every night I write everything down. Like John Madden, God bless him, used to put X's and O's on the TV screen so he could be close to the action. That's what I do. It doesn't take a long time, but it puts me closer to the action. And then I do a lot of the classical stuff. I do my trend lines, but I don't only draw my trend lines from a bottom, because I noticed I was getting whipsawed. I'll draw them from a secondary bottom or a prior bottom. I'll often draw my trend lines from 3 different locations. I look at gaps, combine it with outside days, outside weeks, and I do a lot of the classic stuff, which now may be cutting edge because a lot of people are doing their own stuff. So I've stayed true to what I've been doing for many, many years, but realizing that the stock market is a separation specialist, and it's always looking to separate someone from their money. And it doesn't care whether Weiss has been doing this for 5 decades, and it doesn't care if someone is a member of Mensa, which I proudly am not. I'm actually a member of Reverse Mensa, which are people who have IQs under 100. And I'm adding to my contingent every day.
Let me ask you this.
Things simple.
Let me ask you this. You're talking about 5 decades. And when you talk about 5 decades, I can't help but think about interest rates. Jeff, you got a couple of years on me. I was born in 1982, the start of a secular bull market in equities. Some say it's a coincidence. I'd argue otherwise. Nevertheless, interest rates really have been falling my entire life, right? And for the entire careers of many market participants, I think about what percentage of professional investors were professionals while interest rates were rising. And
Oh yeah, I remember that 18 and 20%.
You're the only one left.
Absolutely.
You're the only one left,
After
Jeff.
6 months, you tried to get the longer term rates, and they weren't there. Everyone grabbed for the shorter term. And again, people have seen what interest rates have done now, and people, even if when I look at the market. People say, Jeff, what about what's going on here? What about interest rates? What about the money supply? Now, when I was a kid, money supply was huge. We had Dr. Death and Dr. Doom, Albert Wajnalauer, and my neighbor here in town, Henry Kaufman. I don't know why they called him Dr. Doom or Dr. Death, because he's probably the sweetest guy on the face of the earth. And I actually ran into him at a Dunkin' Donuts. Not that that's my diet, mind you. So yeah, I remember the money supply. I remember the economic whatever it is, du jour, interest rates, money supply, something else. The bottom line is I look at the market. And when I was going to date my wife, I didn't go out with her brothers and say, listen, I want to talk to you about Carrie. What do you think? I went out with my wife. I went straight to the source. I cut out the middle person. So
you're taking a Dunkin' Donuts?
That's the beauty about technical. I want to see the stock. I look at the stock. I'm not looking at the company, not me. I'm not smart enough to.
Jeff,
let me bring you back home. Let me bring you back home.
I get going. It's hard to bring me back home.
Yeah, no shit. Interest rates went down for 40 years, right?
I remember, yes.
Fastest rate of acceleration ever for interest rates now. Have we seen, was that it? Crude oil trading below zero, was this all it? And now we should... we should think about what a rising rate environment looks like for the foreseeable future. Should we be thinking about an environment where, rates are not necessarily going down, but they're not going up either? They're kind of just churning sideways. What are your thoughts, bigger picture, on rates here?
Well, first I need to see it, and I don't know, correct me if I'm wrong. When I do my closing charts, rates have not made new highs. Am I correct? Right? On the, weekly closing, what is it, the 5-year, the 10, when I looked last, a few days ago, and if you're looking at T-bills and you're looking to lock in rates and trade those instruments, fine. But me and stocks, I'm aware of it, but does it stop me if I see a stock or something that I believe needs to be bought and someone says, Jeff, I think rates going up to 300 basis points, for instance, I say, very good, I'm buying the stock. I don't let anything get in the way of my direct
you don't care. Got it.
With the market.
So you're focused on equities, and you don't really care whether rates are rising, going down, sideways. Don't matter if you.
That is correct. Although when I want to do something with bonds and that, it's a separate analysis. Now I know intermarket analysis is big. Love John Murphy. He was a neighbor of mine. John Murphy actually wrote a blurb for my book, Relationship Investing, Stock Market Therapy for Your Money, which basically relates the market to life and takes technical analysis and relates it to love, dating, marriage, divorce, and interpersonal relationships to take a technical subject and make it far less technical. But that's correct. I compartmentalize them, JC.
Jeff,
most people don't. I do.
Jeff, we gotta hop because we're gonna bring in our resident day trader Kimmy Sokoloff. But before we let you run, what is the best kosher wine? And don't give me this Manischewitz bullshit. What is the best kosher wine?
Well, here I'll tell you. I have. Where are we? Hang on.
Manischewitz is good,
it's
man.
Here somewhere. Let me look.
Manischewitz is not good.
Here, no, it's Yarden. Y-A. Here it is. This is a very good one. Cabernet Sauvignon. This is a Yarden. And there's another one named Covenant. Covenant is a really good, wine. From what I hear, I can't afford it yet, but I am saving up in my change jar to be able to afford it, so we could do the wine blessing together. I want to thank you.
Show me the wine one more time. Show the wine one more time.
Take a look at my book if you like. I'd be honored.
Show one more time. Show one more time, Jeff. Show the kosher wine. Is it Cabernet Sauvignon?
This is Yarden. Is a Cabernet Sauvignon. My palate tells me it's good because it's over $20. But again. You're the
Rules-based,
wine maven,
rules-based.
and I want to thank you all for listening. I hope to meet Steve Strazza someday and give him a hug. Spencer and I are going out. It was great to see you up in Bethlehem, in my home state of Pennsylvania, and my town of Wilkes-Barre.
All right, Jeff. We'll do lunch soon. BYOB.
Have a good one, Jeff.
Thank you all. And remember, risk management means something. Preserve what you have until trying to have more, and study 29 to 32 and study 73 to 74. Okay?
Done.
Thanks,
All right.
Love you all. Thanks for having me,
Later,
and God
Jeff.
bless you. Have wonderful,
All right.
safe.
Oh, I'm sorry. I cut Jeff off at the end. I apologize.
Somebody has to cut him off. He would've gone forever.
Next time we got to get a floor story or two out of Jeff. I'm sure he's got a bunch. All right,
Yeah.
I can't wait to meet this guy.
let's get Kimmy on the show. Dear Lord.
Kimmy.
Morning, guys. That was funny.
You know Jeff Weiss? I feel like you would know him.
I don't. But you know who you should have on your show? I'm going to make
Who?
a request. Do you know Milton Berg?
I do not know Milton Berg. He's like a CFA, right?
Yeah, but he wrote like a major paper for the CMT, like the Journal of Technical Analysis. He wrote like a huge thing. I think he received an award for it. And I think he worked closely with Stan Druckenmiller.
Oh, really? Oh, that's really interesting. I
And
actually
you
do
can
know
tell
who
him,
he is.
Kimmy. He loves me. I love him. And I used to go to the kosher restaurants with him.
Why don't you shoot us an intro email or shoot Spencer?
Yeah,
an intro
I
email.
have to like reach out to him somehow. I have to get in touch with him.
All right, so Amazon, looking for a short here. Let's talk about what's moving. Amazon pre-market is up 1%, up towards 128. You're looking for it to fall down to 125.
Yeah, we'll see. We had some quick shorts yesterday. We got NVIDIA, and then it kept going. You got to be careful with these names because you never know how far down they go. And NVIDIA kept going. We shorted Meta quick. Couple of quick trades in there yesterday. It was overall a pretty good day. So I'm going to watch Amazon. I'm going to see how it is. Sometimes you make a recommendation, and then you have to see how it trades, right? You just don't know till you see how it trades. So I could say this looks good here, but then I could watch a trade and I won't even touch it, right? And then I have a whole list. I have like 5 other names that I'm focused on, with alerts on my trading screen and all that.
Hold on, were you 7 for 7 yesterday on these trades?
Yeah.
Damn,
And you know
Kimmy.
what I did? Home Depot, my target was 308. Some people in the room kept it. I got so frustrated. I just sold it at break even and it went. I had to leave at 1:15 yesterday. And I said, okay, my ultimate target's 308. And I think some people stayed with it.
7 for 7, Kimmy. And you're just like, oh yeah, just another day. No big deal. Just happy Monday. No big deal.
It was too many trades, but we'll see.
Too many trades. So you're complaining that you had too many successful trades yesterday? Is that really?
You know what? I tell the trading room, I give ideas. Doesn't mean they have to take them all. If you don't like to short, I had a couple of shorts in there, right? But mostly longs.
Yeah.
Right?
So you shorted Microsoft for a profit, bought
That was Friday.
US Steel, bought Coinbase for a profit, shorted Tesla for a profit, shorted Nvidia for a profit, bought small caps IWM for a profit, shorted Meta, and now you left it off with open positions, short Qs, Clack, and Netflix coming into today.
Yeah, and then Nike we bought yesterday, and I just got filled on this morning pre-market. Just like
Long.
Yes, I was long Nike. I don't know where it's trading right now, but I was filled pre-market. The room knows that.
Took profits. You took profits.
Yeah, I sold it. I bought it yesterday. I would
Nice
have
trade.
to see where I bought it at. So
okay, can we walk through this Amazon trade one more time?
yeah, let's see. So I'm gonna watch it. Ultimately, it needs to stay below 130. Okay. And we'll see if it could push lower again. Nice move down yesterday. It could bounce some and hover in here and not move today. And then, I'd want to see it push down to, if it stays below 130, down to 125. But we got to see if it has continuation. If it's just a 1 day reversal, or it's going to be a 2 day.
Yeah. That's a Thursday close, 130 for Amazon.
Right. So we'll see how it goes. That's it.
Listen, Kimmy, go do your thing. You're crushing a 7 for 7 yesterday, and you're complaining about it. I can't even with you. I can't even. All right, Spencer, Kimmy, go do your trades.
Bye, guys.
Everybody, if you're looking to participate in a 7 for 7 day, she just like walks it off like no big deal.
The QR code's right there. The link is in the chat. It's pinned to the top. The link is in the description. This link is for Kimmy's private room. That's where she just leaves our show to go to right now. She's there every single day trading and talking about her trades and giving ideas to her room. It's a premium service. Check it out. Day Trader Pro. And again, she's there every single day that the market's open, and she's a beast.
And here's something that a couple of things that I want to reiterate. Number one, she's mean reverting in nature. I know Ivan just put ouch short Amazon. That's what she does. In some of the strongest names, she's looking to fade them for a point or two. Nvidia, a lot of these. So that's actually pretty normal. She's actually really good at it. So ouch only if you're not in it. Number one. Number two, over 50%, 60% of her trades are in the first half an hour of the day. About 85 to 90% of the trades are in the first hour of the day. So what I really like about it is that you don't have to commit your whole day. Very few people have the time to be day trading all day. It's really only 30 minutes or an hour, and it doesn't necessarily even have to be every single day, which I also like. And then for somebody like me who has longer term accounts, not just a day trading account, even though I do just for that, it's also a great idea flow. Just because Kimmy wants to own XYZ for an hour doesn't mean I can't hold it for a week or two, right? So I like the idea flow, and then I can decide on my own if I want to put on a longer term position, because Kimmy and I are looking at daily charts. We're looking at similar things. She's just executing on shorter time frames, which I do too, of course, but it gives me the option as well to put on larger positions on larger time frames. So I like the idea flow too. And then I know there's a lot of people in the room that are actually trading options on Kimmy's trade. Kimmy trades the common specifically, but I know a lot of people do trade options based on those trades.
Yep. All right, let's do a couple more things. I know JC has to hop in a few minutes. We never got to the earnings from today. We had one earnings report that I wanted to get to. That was Walgreens Boots Alliance, which, as our friend Jay Wood pointed out on Twitter this morning, is somehow this thing is still in the Dow, right?
Yeah.
Down
somehow
9%.
Somehow, some way, Walgreens Boots Alliance Q3 adjusted EPS of $1 versus a $1.07 estimate, sales of $35.4 billion versus a $34.25 billion estimate. So the sales number came in okay. The EPS was a bit light. Let's see, did they give any guidance? They did. Oh, they lowered their full year adjusted EPS guidance by about 50 cents from the mid $4 range to basically $4 is what they said. And the stock is down, what is it, 9% this morning.
New 10-year lows as we speak. Can we talk about what is Boots Alliance? What is that?
I'll tell you.
I think it's prescription.
No, this was a merger. This was a merger with a British company, right? What?
Is it a store though? Boots?
Yeah. It's a British. I believe it's a British chain, pharmacy chain, and they merged a while back, and then I believe they split again, but they didn't change the name back. I think I don't think there's any more Boots in the Walgreens Boots Alliance, but
they also own Dwayne Reed. Look.
Do they? I didn't know that.
Yeah. No one knows. By the way,
shitty business.
No one outside New York knows what Dwayne Reed is. It's a pure New York City phenomenon.
All right, but there's a zillion of them.
We're short this space. These stocks have been under pressure for so long. I was just checking. We shorted CVS back in January, their main competitor, below 86. Just hit our target last week, 67.
It's a consumer staple.
Yeah,
Walgreens is considered a healthcare stock.
I mean, think about what they do. You go there for your medicine, right?
I would not have guessed that Walgreens was a healthcare stock.
It's retail. It should really be discretionary. Yeah. You could even make an argument for Staples.
I would have said Staples. Yeah.
Again, gray area with so many of these companies. Big gray area. This one could be thrown into three different groups.
I didn't expect healthcare. I swear I didn't expect healthcare.
You go there for your drugs.
I guess.
Johnson & Johnson's still healthcare, right? Like,
Well, that I know.
could be a staple. So anyway, I don't think, it's hard to find shorts right now. We're finding shorts from this space that are working. I would just stay away from it as long as that's the case. Walgreens is making new lows today.
And we're getting some requests on the for some hot corner, and there's some aerospace and defense action that I want to talk about. Big money in the aerospace and defense.
Stop. That was a Press Your Luck reference. Okay.
Yes. Remember that show?
So hot right now.
All right, big money. Strazza, talk to me about aerospace and defense. Big purchase.
So, you know what Axon is, JC? Axon?
I do not. I can't say that I
Do
do.
you remember a stock with a symbol? Go for it, Spencer. I know you know. Because you guys
TASR.
Mm-hmm.
Yeah.
Oh, this is Taser?
So this was a junky stock. This was a heavily promoted stock. These guys did a lot of, paid research, paid promotions, and a lot of people didn't like this name back in the day. Turns out it was a very real business. They sell these tasers and these, police body cameras, all over the country now.
TASR is this? This is Taser?
They changed their ticker and had to rebrand, their public-facing brand name because the stock had so much bad press about the paid research, paid promotional stuff that they were doing back in the day. So they changed it to Axon, got out of just the taser stuff, started making body cameras too. They make a lot of cool products now. I think Howard's a fan of this one, actually. And they are based in Arizona, I believe. But look, you can't argue with price, right? It's been a good stock for a long time now. I remember trading this one 10 years ago. If we're above 215, got to be long. This one's just stair-stepping higher.
216.
Yeah.
You really want those 2021 highs is
Yep.
what I'm looking at. But yeah, what a beast this thing is. What's the market capitalization on this bad boy?
And this guy who was buying it,
14 billion. 14 billion. Who is this guy?
He's a tech investor. So he's a director, but he's been in a lot of these big, tech startups over the years. So
$4.7 million transaction. That's not nothing. How rich is this guy?
he's very rich.
Partovi Hadi?
Yeah. Hadi Partovi, I think. Then let's look at one more. MDXG Memetics. Can't touch this one. This is one of those heavily shorted, battleground stocks.
Why can't you touch it?
Mark Cahodes is involved in this one. He's been coming after them for 5 years now. There's all sorts of fraud going on at the company. Yeah, it's a small market cap at this point too.
Who is this guy? Cahodes?
Mark Cahodes is the best short seller I've ever seen in my career. I mean, this
That's
guy,
short seller. I've never heard of this guy. He's the best short seller.
you should hear of him.
Yeah. I would not want to get on his bad side.
Dude, I was long Silvergate when he was short. I will never take the other side of any one of his trades again. Learned that lesson.
What company does he work for?
He owns a chicken coop in like California or something.
You know who he is.
He owns a chicken coop.
Yeah, like that's
So
his thing.
he's a short seller that owns chicken coops on the side. Do I have this right?
Yeah.
And this is the guy that I need to be scared about?
Yes.
Okay.
He has made great call after great call after great call for 4 or 5 years now. He told us what was happening with FTX. He told us what was happening with a lot of these crypto companies. He was all over Silvergate. Then he was all over Signature Bank. He's just nailed this area for a long time now. He's been on top of this one. You can't buy it. That's it. So the CEO is coming out buying a very small amount of shares, probably because he has to. But no, you stay away from these kinds of stocks.
All right. I'm out, guys. See you later, Spencer. Strazza was real. Thank you, everybody, for being here. Enjoy. Good luck in the rest of your show.
Have fun.
Was he going to make a tea time or something?
Adios.
He
I don't
doesn't know
play
how.
golf, dude. What am I, Steve Strazza? Get out
Doesn't
of
even
here.
know how golf or make a tea time.
Yeah. All
Out
right.
of here.
All right, JC's out. We're gonna have Patrick Donawilla from the chart report on in a couple of minutes.
Yeah.
Let me run through, make sure we didn't. Oh, we actually did miss. We did miss a mover earlier. We missed Unity. Ticker U.
I wanted to talk about Uber. I wanted to talk about Carvana.
Wait, actually, no. You want to talk about overhead supply? Let's talk about. We didn't even get there yet, and I made it the title of the damn show. So let's talk about that.
Why can't we do it when Pat comes on?
Oh, okay, we can. I mean, he'll be here any minute, so that's fine. Let's talk about in the meantime. You want to do Carvana? Because you had the picture of the tower somewhere. Oh yeah, here it is. What do you want to talk about with regards to Carvana? I don't look at this stock anymore.
These towers are now empty. The Carvana car towers in South Florida on the Florida Turnpike are empty. There's not a single car in there. I saw a couple of them. So I don't know what's going on, but that's my boots on the ground research for the weekend. I don't know if you ate at Kava or anything, or if you have any boots on the ground research to share. But this was good. Talk about a channel check. I was live picturing from the Florida Turnpike. No, I'm kidding. My girlfriend did it. But look at that. I don't know what's going on with this company. They're up big this year, but it doesn't seem like operations are going so well. These towers were very full for the past.
Didn't they just raise a shit ton of debt or something?
They're always going to the capital market.
Yeah.
I don't know how this guy does it. But he takes a lot of it every time too, which is very strange. Concerning. In the other automobile world, Uber, did you hear the comments from
No.
What was it, Bernstein yesterday?
No.
Try to find him.
Here, let me find him real fast for you.
You got those
It was a price target raise, okay, from 45 to 50. They said it's the most compelling free cash flow growth story one of the most compelling free cash flow growth stories in the U.S. internet sector, is what they said.
Dude, this company is doing everything right. And at a certain point, Sean and I were talking about this yesterday. This doesn't have to be a complicated investment thesis. Their CEO came in, Ara Khosrowshahi, whatever his name is, has been doing an excellent job buying stock, doing everything right. They're killing it out there. I use Uber. I use Uber Eats. We all use it. It's one of those products and services that we all use all the time. Sometimes your investment thesis could be that simple, right? The company's being run well. We all use their product constantly. They are the industry leader. They're growing so quickly, and they're cash flow positive. This company makes money now. This is not unprofitable tech. Like, this is real business, and it's a good business. So I really like this one over longer time frames. It's got that base breakout pattern. It's got the pattern we're looking for. I think there's a lot to like in Uber for a long time.
Look, credit to them, credit to the management there, because you're right, when he came in, I forget what year was it, 2 years ago now or 3 years ago, I don't even remember, but his mission was simple. It was make the company profitable, right?
He's an operator. That's it.
Right. So and they're getting there, right?
And
right?
You see it all the time. A lot of times, what these tech startups do, right? This is important to understand. They come to the market and they don't give a damn about their bottom line. They have one job, which is to grow their audience, grow their total addressable market, grow their top line. Once they've grown their top line to a satisfactory level, right? And every market's different. So in the case of Uber, they got to be satisfied. They're the industry leader. They have a huge market. Then they bring somebody in to clean up everything below the top line, right? Clean up the cost structure and make sure the margins are good and everything, that is falling to the bottom line. That's what he came in and did. It's a killer business, right? They have a huge, huge customer base, industry leader. He's coming in, doing all the right things from an operational standpoint. This is a, smoothly operated business, nice reversal pattern. I think this one will be a secular leader for years to come. And I think
every once in a while, it's nice to just be reminded at how awesome these companies are. At Sunday night at around 11 o'clock at night, I remembered, oh shoot, I had a 7 a.m. flight on Monday morning, right? It was how am I going to get to the airport?
Mm-hmm.
I went on Uber.
You can spend.
I reserved a ride for 5 in the morning.
Right.
And 7 hours, 6 hours from now.
Good.
And then I went to sleep, and that was it.
I have Uber One. I think it makes a lot of sense. I use it. I use Uber Eats all the time. Not any of the other ones. It's just they're the best in their space, very clearly. And Lyft, it seems like, is really struggling. So that could just be even more business for Uber in the future if Lyft doesn't get their act together. So anyway, I like Uber a lot. That's my spiel on that. Do you want to bring Pat on? We'll talk chart report, and then I will hit my little overhead supply theme here.
Let's bring Pat on right now. Yeah. What's up?
How you doing? What's going on, fellas?
Hey, PD.
Good morning.
Uber, look at their ad revenue. Sure. Yeah. I was looking at their financials the other day. Looks looks good to me. This has been the plan the whole time. Yeah, of course.
Wait, time about ad revenue. From what?
They have an app. I don't know. Uber Eats?
People advertise on what?
Uber Eats?
You can advertise on Uber Eats? I get
Hey,
okay.
These guys are a tech company. Good for them. Making ad revenue? Great.
I didn't know that. All right. Cool. Good for them.
Steve, I don't know if you remember in Chart Request Live last week, we charted Uber versus Lyft.
Yeah, we
And I
did.
think that's such an interesting ratio because it's just like, two, what do you call them? Supplementary companies, basically. And you can easily just look at which one's outperforming.
Yeah, they're substitute companies, right?
Complimentary.
Use one or the other. And Uber's just killing it right now. Pat, why don't you tell the people about Mark Cohodes?
Mark Cohodes, well, he's a short seller. He's a pretty badass short seller. I know there was this one company, MDXG, I think it was.
Yeah,
was
we just talked about it. Yeah.
Oh, okay, yeah. No, so I think the CEO randomly either tweeted at him or accused him of aggressively shorting the stock, and he was like, "I've never even heard of this company, but now I'm going to look at it." And so he went and looked into it, and he found some wrongdoing, some fraud. Steve, you could probably talk to that better. I don't really know what was going on there. But then, yeah, he aggressively started shorting the stock. And even before that, during 08, I think he was he had a hedge fund and he was short a bunch of stuff. And then their prime broker, Goldman, didn't pay them out and tried to dispute it. And so he took them to court and he won against Goldman, which is I don't have to tell you guys, that's a rare accomplishment. And then he went out to California to, I think, Sonoma or Napa, and started a chicken farm and just hangs out, but short stocks. And I know, back to the MDXG thing, I think the guy's name was Parker Petit, the CEO. And
that's got the deets. Look at this.
Eventually the guy, he was really well connected. And the guy sent like 2 off-duty FBI agents to his house to intimidate him, to get him to stop shorting. And then, of course, he just pressed the gas pedal and just kept shorting it. And this thing went all the way down. I think the CEO ended up in jail.
So I just told JC, you can't touch this ticker simply because, Cohodes is in it. And no, but it's a good lesson, right? Maybe I'm wrong, but there are just so many other stocks. Why waste your time with a battleground stock like this? We have so many options, so many nice charts out there. Don't have to buy this one, right? So like when a guy like that is involved, I've just learned from experience now, walk away. I don't want to be a part of that. That's it. That's my thesis there. You want to do the chart report?
Yeah, let's do it.
All right, I have it up on the screen here. Let's bring it up.
Can we run the bumper again?
You want to run the bumper a second time?
Yeah.
Is that necessary?
Yeah.
I feel like now we have to.
Now we have to.
All right. Okay.
All right, Pat, talk to me.
All right. Can I tell you about the standout theme that I know you're going to like it, Steve? I'm a seasonality junkie. But first of all, NASDAQ, almost best 6 months. I mean, we got a couple days left in the month, but almost best 6 months, best start to a year for the NASDAQ ever. And on top of that, we're approaching a really bullish 3-week seasonal stretch for the NASDAQ. Right between June and July, there's a 3-week stretch, 12 days, so a little less than 3 weeks, or I guess maybe 3 weeks with the holiday in there. But really, really bullish week. If you scroll all the way down, you'll see a chart from David Cox. Another thing is, yesterday was one of the worst days of the year, seasonally speaking. So we survived it. Really mild, weakness yesterday. And even while it was weak yesterday, we saw some really good breadth improvement.
Breadth was great yesterday.
Right? Thank you.
Great. It was very localized weakness in the strongest stocks. It seemed like, just classic profit taking.
Right. And yeah, you had Russell 2000 was up, equal weight was up. and transports 3-month highs. The mega caps took a break, which, okay, that was due, but you needed to see everything else kind of step up and allow mega caps to take that break, and they did. And so, yeah, we ended lower yesterday, but I liked the action yesterday. What about you guys?
And it depends what your measuring stick is. All the equal weight indexes were up. The cap weighted ones were down. We've talked about this theme so much on here. Continue to see it play out in real time every day. Another big thing yesterday was growth and value. We're just moving in opposite directions. And even the defensives trended really well. And frankly, I don't know how defensive real estate is these days. I think real estate falls more into the cyclical category than it does defensive. I don't think it's defensive
What's going
at all.
on with real estate and yields?
Which part of real estate? I think the market.
So I'm talking about, when I say real estate, I'm talking about the real estate sector, which is REITs, which is predominantly commercial real estate. When I'm talking about home builders, we're really talking about retail and residential real estate.
Okay. Yeah, commercial is a risk-on asset these days.
That's what I'm saying.
Yeah.
So big move from real estate yesterday. I know they had some positive news. I think it was SL Green or Simon. But either way, I don't think it was a bearish tape at all. And we've been saying it for so long. I mean, Pat, we talk about it every week. These growth stocks, these tech stocks, you were just talking about the performance from the NASDAQ so far this year. Let them give back some. Sean was making a point yesterday. Frankly, if they went sideways for a long time, that might be the most bullish outcome. You don't want a straight line, nosebleed kind of uptrend. Those don't end well, typically. Let's have an orderly uptrend and let this thing last. So I don't think it would be a bad thing at all. Maybe you get that, rotation or expansion participation from the value and the cyclical stuff, real estate, whatever it might be. Growth gets to cool off, take a breather. These tech stocks, they're already at all-time highs, a lot of them. Maybe it's just consolidation phase for the leaders.
Yeah. And while I wouldn't be surprised to see that, I don't think it's one of those things where we need it to happen. It's not like, oh, these need to cool off. They need to correct. They could totally keep going.
Yeah.
I could totally see a scenario where they don't, and that would still be healthy. But they also don't need to rest too hard, I think.
Let's hit the charts. Let's stick on this theme. Let's stick on this overhead supply theme. Kick me off on chart 15 here. These are your leaders, right? So when we're looking for, what are the chances of additional upside from here, right? We want to look at the strongest groups. The strongest groups should really lead to the upside. No group stronger than large cap tech right now, right? And any disagreements on that? Am I missing a sector index that's better than large cap tech?
No.
As close to the all-time highs as pretty much any of them. I know some industrials are close too, but it's really the gains off the lows that make this index a leader, right? So XLK running right into those late 2021, early 22 highs, around 175, 176. Really nice base here, but you couldn't find a more logical level, right? Ever since we took out the August highs, retraced that 62%, which you see in gray in the little rectangle in the middle of the base, pretty much straight line higher. This has been the biggest pullback we've had since really February at this point. So a very logical level for some corrective action. Now it kind of becomes a question of, now what's the nature of that corrective action? I don't look at a chart like this and say, oh, let's short it, right? No, I say, okay, like how does this go from here? Like how much downside is there? Was it just a false start and go? Next chart. The other point that's important is it's not just tech and it's not just growth. And that's why I overlaid these two. Simply to make that point, I could use the DAX here. It probably looks even more similar to XLK because there's more tech in it. Yeah, there you go. These charts all look like XLK. Here's the problem. If you go back to the CAC and XLK chart, there's only 5% technology exposure in this France index. It's shown here in blue. So it's not that tech stocks are the only ones pushing back to new all-time highs. It's simply that the best stocks are now back to all-time highs. In France, that's luxury goods, right? LVMH, I think, is the largest holding there. In Germany, there's a lot of industrials. There's a lot of healthcare, right? It's really different groups leading the charge. The leaders are now at overhead supply and have earned, some period of digestive action. We go to the next chart. Even beneath the surface, who's driving this action in XLK? The big boys. We're back there, right? Apple, Microsoft. Well-deserved breather from these stocks. If we get some corrective action from these names, it's not, huge negative. It's not some sort of bearish data point. It's deserved. It's constructive. Next chart, even industrials. People have been sleeping on industrials. You don't hear anything about industrials this year. It's all tech growth. No, these charts, every way you cut it, even if we did the mid caps, right here we have large cap weighted in black, large cap equal weighted in dark blue, and then small caps in light blue. They're all back at new all-time highs. They're right there knocking on the door. But again, logical level. Look at all the touches up here. We've seen prices pause and reverse or get rejected at this level so many times in the past. Maybe it happens again, but the more times the level is tested, the more likely it is to break, right? So like you said, Pat, we don't want to make the bet, especially with a group like industrials, that they can't rip out of these bases and go, because you always want to ask yourself, like, where did these trends come from, right? With something like tech, big gains, already booked a lot of gains. Something like industrials, kind of been lazy, right? Like there's room to run there in industrials. In fact, I kind of like this more than tech going into the third quarter.
And Steve, you kind of get at it with this chart, but breadth within industrials is pretty good. I think
solid.
Over 75% are above their 200-day. Over 75% of the components in XLI. I think
that equal weight industrials versus equal weight S&P 500 chart should be RSPN, RSP now, because they changed tickers. Just straight shot higher. That relative trend looks so good. Do you want to talk about the laggards quickly? Right? Because I think this all kind of supports a thesis or a near-term outlook of sideways, of ranginess, of some chop, some trendless action. When you look at the leaders, they're running into resistance. They're running into overhead supply. When you look at the laggards, they're running into support. They're checking back into these, prior cycle highs. This is equal weight financials, monster level here. In March, we got new multi-year lows. You could see it there. And then we've just been coiling in like this bearish continuation pattern ever since. Not really about the pattern so much as it is about where it's taking place. We're right at the early 2020 and 2018 highs. These levels could not be more vital to this trend. If they break, that's structural damage. But I have a strong inkling that they won't break, just due to the price action and all the bullish developments we're seeing everywhere else in the market, right? I don't want to make the bet that the laggards are going to just blast through, violate, this support and leg lower, just like I'm not making the bet that the leaders are going to blast through resistance and leg higher. I think both of these groups, the best stocks and the worst stocks, are just kind of due for some sideways. So maybe we have a lazy third quarter and then we, resume in the fourth quarter next year. But that's where my head's at with a lot of these trends. I think, why don't you just throw up energy too? Energy's now a laggard as well. JC's out here buying Chevron. I don't hate it. His risk is really well defined, but talk about vulnerable, right? These trends are super vulnerable at this shelf of former highs. Energy, this is large cap energy. Crude oil, equal weight energy looks the same. This level's got to hold. If they don't, might be some trouble. But again, I'm making the bet that they do hold. The resistance holds in the leaders. The support holds in the laggards. And maybe we just have some range-bound activity.
Damn, I just realized that, Strazza, you're not going to be here for like our big, mid-year review.
We don't do mid-year reviews here. We don't have an HR department.
That's why you're not going to be here for it. No, the timing of it this year doesn't work out with your trip to Asia. The July 1st is on a Saturday, so
I think I'll call in. I was thinking about it yesterday. I think I'll be calling in like after dinner most mornings. Spend 10-15 minutes with you guys. Maybe not even that much. I don't really want to even talk to you for more than 10 minutes.
That's fine.
But really, I think Patrick and Ian will have the hardest jobs while I'm gone because they got to put up with you and JC.
It's my pleasure.
Yeah. Oof, is it?
I think I'm not the problem here. Before we get too far away from it, I didn't want to bring the code up on the screen for the chart report. Right, This is what we were sharing earlier. I'll bring it up again right now. This is Pat. Actually, why don't you just describe the chart report, because this is your baby.
Yeah, I mean, I always call it the newsletter with no news, just charts. But it's a technical recap of the markets. I mean, we kind of came up with the idea because, as technicians, we try to ignore the news and just focus on price action. And, we felt a little lonely. We didn't have any sort of media. We didn't have anything to consume. And so this is a curated list of some of the best charts we see on Twitter and also research that I get sent. So we curate it all into one daily email. Takes less than 5 minutes to read, and you're all caught up on the most significant trends out there. and it's just price action. None of this, all the narratives and news out there. It's just charts and price action.
And some links, a link to your weekly show that you do, trend lines over headlines, and then quote of the day, and of course the charts. And it is free, as Pat mentioned, and it is sent every single day. The link to get the chart report is in several places right now. It is both in the YouTube chat and also the YouTube description. If you are too lazy to go there, there is literally a QR code on the screen right now. You can just hold your phone up like so. You scan the code on the screen and it'll take you to a sign up page. In fact, I'll do it right now just to make sure it works.
I love that.
Does it work? I can confirm it works. There we go. Okay. Get the chart report, everyone. It is free, and it is, like Pat said, a really great summary of what was happening in the world of financial Twitter on any given day. Okay. Let's get the code off the screen now. That's enough of that.
Recess. Is that what I see you saying over there?
Recess. Let's go.
Recess already?
No.
All
but
right.
I do have a lot of recess topics today. Can we talk?
All right.
Netflix? No. Did we hit everything?
Listen, do we have time to pull up the chart report again? I got a couple more charts I want to show you guys.
Oh, yeah. We never hit everything, Steve. Yeah, Pat, what do you got?
So if you scroll down to Nautilus charts, it's probably the 5th or so chart. It's a seasonality chart of Apple's relative performance.
Wait, did I pass it?
Yeah, and I put these two charts together on purpose. Steve, you just had that chart of Apple and Microsoft up. And then look at this. Look at this seasonal composite. So that's Apple's relative performance. But July, August, man, Apple
is it a Christmas thing? Right? Because Apple always just has a monster fourth quarter.
Well, they have that big event in September where they usually unveil the phone. So maybe it's a run up to that event, and then you kind of see the sell the news there in September, October.
I would love to see how this seasonality breaks down year by year, right? Because their product announcements, all the buzz around them that we had 10 years ago, we don't really have anymore. Like, you're right, Pat. That used to be a huge thing. Every September, Apple's new phone, people went crazy, waited.
Yeah, I have a theory.
Now they have a new camera, new battery. That's it.
Yeah.
I have a theory. This is just a total shot in the dark. I'd be curious to see how a place like Verizon or AT&T or T-Mobile stacks up too, because maybe a lot of phone plans expire in the summer and people are upgrading to new phones.
I have a theory that T-Mobile is coming to eat AT&T and Verizon's lunch. I really, really think that these companies are now cash strapped. They're in trouble. There's not much that they can do. They're just not financially flexible. T-Mobile, on the other hand, doesn't pay a dividend, doesn't have that issue, try to keep up with the dividend that they have. I think you're going to see T-Mobile making deals with Apple. Do you remember the days of, hey, come sign up for AT&T and get a free iPhone?
Yeah.
You're going to see T-Mobile start doing stuff like that. I don't think AT&T and Verizon can anymore. They don't have the money. They don't have the capital.
Maybe
that anymore. I think T-Mobile makes a big move in telecom in the coming years, and I think you see them do things with Apple.
And again, just a total shot in the dark with regards to this chart up on the screen. Maybe it's just as simple as phone plans re-upping and people getting new phones. I don't know.
Somebody wants to see a Carvana chart. Do we have one, Fonz?
Wow.
Why? Yeah, I guess.
I don't know. I'm sure we have one lurking, but it's
we're short at interest on this thing now.
Still in the 20s. Last I checked, it was still in the 20s. Let's see if I can find it.
Did you read the pizza in New York City article?
No.
Yeah. This is all right. Let's do a recess here, and if we have a Carvana, if we have a Carvana chart. Oh wait, there it is. Okay.
Oh wow.
Oh my God, 50%.
Yeah, I saw
50% short interest.
Yeah, I saw 45% on Koyfin.
Holy crap! Why did I think it was in the 20s?
Make sure that's updated, Fonz. You see 35 on Koyfin?
I saw 45 on Koyfin.
45, yeah, okay. A lot of times it's hard to nail down the current outstanding shares number, especially in a company like Carvana that's coming out and issuing new shares constantly and doing all these secondary offerings. That tends to be why you get a difference in short interest. They're using a different denominator for outstanding shares or really it should be the available shares, which is just the public float. But no, I'm just saying that because if you're looking for short interest data, you'll notice that it does vary among the data providers. So
do you remember when like a couple of years ago, TrendSpider started a petition to send to, I think it was maybe the CFTC, or I forget who it was.
Probably FINRA.
Yeah, to get short interest data more often, and
there real time.
There are initiatives out there to get that done, and I don't know where it's at right now. I need to check up on that. But this was a thing we talked about like last year, getting that short interest data more often, at least. I think they're trying to do it at least once a week instead of bi-weekly, which is what we're stuck with now. We don't get updated short numbers except for every 2 weeks, and it's also
twice a month. Yeah.
I wonder why that is.
Because I'll tell you why it is. Because the current financial system is very, very antiquated in terms of the mechanics, right? Blockchain can really help current infrastructure and capital markets in a big way, and it probably does in the future. I think they're coming for a lot of these areas, whether it's stock settlement taking too long, short interest, data not being reported on time or in a timely way. Listen, that GameStop thing might have never happened if it wasn't for such a lag in short reporting. So,
you think so?
Maybe.
All
right. Let's do some. Wait. So, what was the conclusion of that Carvana chart? What was the takeaway there? Let's bring it back.
It's a nice base. If you got to be long this thing, $20, but not below there. If it's below 20, you don't want to ride it to zero because that's probably where it goes over the long term.
And before we go to recess, I got to say one thing. You know what I keep hearing a lot, Steve, the last day or two?
What do you keep hearing?
A lot of high and tight flags. I know you love those high and tight flags. You seen that too?
They are the best short-term patterns to trade. Well, over longer time frames, you guys know I like my bases, but shorter time frames, the high and tight flag, there's nothing better than it. Nothing better.
And what is that? If people don't know, it's basically just like a small pullback within a strong uptrend.
Short-term bullish continuation pattern, typically coming off a really strong rally or up leg, and it's just a short consolidation phase. Usually lasts a couple weeks, and then you could just buy the breakout above the upper bounds of these little coils. That's it. That's how you get in. It's a good way to get into the leaders. The strongest stocks will correct that way in these high and tight patterns, and you can literally just play their resolutions for the next leg.
All right. But before we do recess, Frey Lee asked if we could chart BCC.
The Boise Cascade.
Yeah, what is
I
that?
have no idea. I have no. Let's look up. I don't know what BCC is.
Yeah, Boise Cascade.
Boise Cascade. Yeah.
Lumber. So
what is that?
Nice chart.
Into the building materials. It's really a lumber and wood company, but it's that building materials theme. Let's do a whole thing on building materials tomorrow, guys. Let's find the best charts. There are so many making new highs. I would throw this one into that theme. I like it. For Lee, yeah, I like it. I think you could buy the breakout here, $85.
Yeah,
I like the top too. I'm very long, Nikki.
Seeing a lot of construction type stuff.
It's all working. It plays into that residential real estate theme.
Right. It plays with the home builders working and all that too.
Say that again.
In the buzz or in the heat check last week, one of the scans that we do at the chart report, we had Vulcan materials, and I believe they make concrete, right? And so it goes along with all that. If you look up the ticker VMC, I mean, you'll see things just sprinting out of a base.
Can we throw on VMC real quick? Then we'll go to recess. We'll go a few minutes over today. Hope nobody minds. But VMC, we just got long yesterday, so we're through under the hood. Yeah, I don't know, Fonz, if you have a chart. I wanted to remake them, but VMC looks great. We got long Martin Lee Marietta materials as well. You know what? I'm just going to throw out some names from the building materials.
No, save it for tomorrow. Save it for tomorrow.
All right, let's go. I want to do recess. I got things to say.
Okay. All right.
Pizza in New York City. What's going on? Did you read the article for me? It's like my chat GPT. What's going on? Are they really banning coal-fired pizza in Manhattan? Because
I skimmed it. So the hullabaloo is that was it a state regulator, I think, is saying that all these like really old pizza ovens need to reduce their carbon emissions. There it is, says it in the headline right there.
That's why it's so good. Do they know this?
I think this is just a classic, like, A, silly government, and B, like silly New York Post, right? Because like I don't think nobody actually thinks that pizza ovens are a major contributing factor to climate change,
Well, aren't
right?
they trying to ban nat gas stoves as well?
Nat gas stoves are great, though.
There is a video going around on Twitter of called they called it the New York Pizza Party. A guy went to the mayor's house, or the mayor's mansion, right? And threw pizza over the gate.
Wait, at like Gracie Manor?
Gracie.
Wow, that's hilarious.
He threw pizza over the gate.
Listen, so this isn't about shutting down these restaurants. It's about money. They want money.
Yeah.
It's a fine.
Yeah.
They want to fine them for polluting, but it's really because the best pizza joints in New York City that make the most money are coal-fired, so they have the money to pay a fine. It's just an excess tax on some of the best pizza joints in the city is what it sounds like.
Yeah. All right. That's your recess. Pat, do you have anything for recess?
Do I have anything for recess?
I got nothing.
I got nothing. You know, next time I'll bring something good for you guys. But
I'm trying to think.
You wanted to talk about the Netflix password sharing, just ripping families apart, Spencer?
Oh yeah. No. Oh yeah. I got
all across the country.
I got clickbaited last night. I don't get clickbaited very often. But I did.
What trash that was.
The Wall Street Journal got me with a push notification. I probably don't have it now because I clicked on it. Yeah, I don't think I have it because I already clicked on it, but it said, basically the notification said families are being torn apart by having to cut people off from the password sharing. And I was like, oh, I'll read about that article. So I clicked on it, and
drama. There was no drama.
There was no juice. It was just
teenagers mad at their dads.
Yeah, sometimes I think they're trying to start some stuff.
Stop hating on Wall Street Journal, both of you guys. I'll stop you. I was on the phone with Simon Constable for like 45 minutes yesterday. What a lovely guy.
I know. I love the Wall Street Journal. That's why I clicked on the article, and then I got duped. Also, just so everyone knows, the person who writes the article is never the person that writes the headline or the notification. That's a different person entirely.
Yeah, we deal with that here, don't we, Pat?
Yeah, we do. We do.
Not pointing any fingers.
All right. All right. On that note, that is our show for the day. Oh, we got a question earlier in the chat about what is All-Star Charts.
Yeah. Go to the website. I don't know if we should even answer that one.
There's a whole my answer to that person is there's a whole bunch of stuff in the description of this video on YouTube. There's links. There's basically just links there, and there's also a phone number and an email where you can go and you can talk to Mary about the things we offer. And there's a whole bunch of stuff there, so check it out. Thanks to our guest today, Jeff Weiss. We were definitely getting back on the show and hear some of his crazy floor stories. Yeah. Thanks to Kimmy Sokoloff, as always, and Pat Donawilla, and JC, and Steve. And thank you in the chat. If you're watching us on YouTube, you want to hit the thumbs up, I'd appreciate that. I love my homies. Thank you very much. Can we briefly bring up the schedule, Fonz?
Man, you guys have the best viewers. You know, they're always chiming in with great questions.
Our chat is so fun. Robert Grimm, you're 100% spot on. I couldn't agree more with your comment there.
It's like CNBC, but cooler. Yeah, and you can ask questions. It's interactive.
I want to get the chat really going on our other shows. Like we had a great chat on the Flow show yesterday. I hope that we keep that drive alive and make that a regular thing.
Yep. So space is happening at 11:30 today.
Yes,
come by. Come by.
That's on Twitter. Here's the YouTube schedule for the day. CRL Chart Request Live at 1:00, and part of the price action will get uploaded to YouTube probably around 3:00 or so. And then I want to say one more thing. I just had it, and now it's gone. That's a shame. Forget what it was. Oh, well. Okay. Smash the like. We'll see you guys later. Good luck with your trades. Go make some money. And that's a wrap.
Peace. Great talking to you guys. See
I can't take no loss. I don't even know what it costs. I hit the ground, then I go